What is resistance in stock trading? Let's get to that right now. That concept is an important one. If you're trading at home, you want to understand how resistance work. I'm Rob Tetrault. I'm a portfolio manager with Canaccord Genuity Wealth Management. This is what I do. I build portfolios, I buy stocks, I buy bonds, I sell stocks, I sell bonds. Let's get right into it. So resistance, or the resistance level, is the point at which sellers will typically come out of the woodwork and continue to sell a stock, thereby preventing that stock from exceeding that number. There's typically a couple different ways that this works, but think of it this way. Let's use round numbers, because a lot of times these resistance levels are numeric, right? They're numerical and they are focused on real large numbers. So let's say $50 or $100 for a stock. That's a number that we can wrap our head around and we can appreciate and understand. So let's say that there's a stock and it's not been able to get above $100, because every time it gets close to $100, the seller starts selling that stock. So whenever you have selling pressure, the stock falls, right? The more selling pressure you have, you can't get buyers above that number because there's so many sellers. So a stock might rally 96, 97, 98, $99, and then there's sellers, and it trickles back down to 95. It tries it again. It rallies to 98, 99, resistance. It falls down again. It goes again, 98, 99, resistance, because there's so many people, traders, investors that want to take profits at that number that there is a resistance level at $100. Now that's a numeric resistance level, but there can also be technical resistance levels. So in stock trading, there's a whole bunch of different technical indicators. There's RSI, there's MACD, there's a whole bunch of different technical indicators in stock trading that form resistance. And there's also patterns that form resistance. So stock traders and technical analysts will look at the historical patterns of stocks and they will look for resistance levels. In other words, at what point in the past were sellers coming out of the woodwork? Maybe for some reason it's an arbitrary number. Maybe it's $33 or $36. And that's a number that's been tested multiple times. And they'll say a breakthrough has failed. They will say resistance held. There was a resistance level at $33 and a breakthrough did not happen. Resistance held for the stock at $33. $33 might be a technical sign where the moving averages converge, or perhaps it's an RSI or a stochastic indicator, or it might be just another technical indicator that has shown resistance. But for whatever reason, there is resistance at that level. Breakthroughs are not able to happen. That would be resistance. So if you're looking to exit positions and it's multiple times you've not been able, you might comfortably think that a stock will reach the resistance level again. Sometimes it takes multiple times for a stock to reach a resistance level before it breaks through. And when it does break through, you'll hear technical analysts say the stock broke through. The stock broke through a trading pattern, and now the next resistance level is at $38 or $42 or $46, because stock trading patterns are repetitive. Now, you have to be very careful when you're stock trading that you don't only look at technical indicators. You want to look at the fundamentals of companies. You want to look at how profitable they are, how good management is, what are the earnings, have they had growth, what are their upcoming expenses, significant expenses, and how the sector is doing as a whole. Take all of that information, take the technical indicators, put that together when you're building a picture for whether or not you want to own a stock. It's important to have more than just the technical indicators or more than just the fundamentals of a company. Much like resistance is the top, and that's where the sellers come out, support is the bottom, and that's where the buyers come in. A stock might have kind of a mirror-like image with respect to support. They might say there's support at $20 for the stock. So it typically doesn't go below that because that is a cheap price for that stock. So companies typically don't go below that because the buyers come in at that price and there's buying pressure, which typically causes a bounce in the stock at that support level. Same thing, if you see a breakthrough negatively through that support level, a technical trader might say, uh-oh, we had a breakthrough on the downside and now the next support is at $15. All right, guys, thanks for tuning in. I'm Rob Tetrault, robtetrault.com, portfolio manager at Canaccord Genuity Wealth Management and the Tetrault Wealth Advisory Group. Thank you for tuning in. I will see you in the next video.